So I actually checked everything that you guys have been dropping in the group. So I felt like uh I should readdress our structure for you guys first. And the way I will readdress it, we'll address it in a labeled way. When I say labeled way, I want to take you back down to understanding top-down analysis. The reason why I'm saying this is I want everybody to be saying the same thing. I want us to be saying the same thing. So before I go to all these tricks and all, I want to bring us back to what is it called? Top-down analysis. Because I remember that when I was talking about structure, I did not talk about top-down analysis. And top-down analysis is the reason why most of you are lost inside what is it called? Inside your trading cycle, that you don't know, am I buying or am I selling, or is it whatsoever? It's as a result of not understanding top-down analysis enough. So once I break down top-down analysis with you, and we are going to be labeling everything together. So which means most likely 80% of all of you should be seeing the same thing after you understand the top-down analysis. Then after the top-down analysis, then we can use the top-down analysis to now understand the FVG creation and reclaim and the entry model. So once we do that, then I will explain the three candle formation. So that's how we are going. But let's first start with that, because I want us to be seeing the same thing. And the only way we can be seeing the same thing, the first thing is understanding structure the same way. You know, some of you will just get lost. You don't even know the first thing to do when you get on your chart. And that's why top-down analysis is very, very important. Okay. So now let's get to it. Let me share my screen. So I want everybody to listen to me attentively. This would help. And I'm telling you, it would help a lot. It looks so simple, but it will help. And I am not just going to be explaining top-down analysis like how your mentors used to. I'm going to be explaining it with order flow. I'm going to be explaining it with order flow, which is we are going to be deriving every point that would be responsible for future reversal. Every point that will be responsible for mitigation, continuation. Because based on order flow, not every point will be mitigated. Some points will be ignored. So I just want you guys to just listen attentively and let's move together. Today, we might actually be having this session 3 times. I'm coming. Where's this chart? Okay, yeah, good. So nobody should on video, please. So I don't want us to fight though. So now, can you guys see my screen?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
So, okay, let me clear this chart.
I like your quote. You don't have motivation.
You like my what?
Your quote, just one price setup daily is all you need.
That's all you need, my brother. Forget about other things. Even if it is a win or loss, get that trade. Okay, let me give you guys an instance, because it's not just all about chat. Imagine you are trading $100,000 account, your own, and you are risking 1% of that account, which is $1,000. In Nigerian money, that is 1 million, right? Do you need to execute trade twice a day, risking that huge amount of money? Do you need to? You
Not
don't.
at all. Not at all.
You don't need to. The only reason why you guys trade a lot is because you have small money and you want to make a lot. That's why. And that is why the rich will keep getting richer. Let me tell you guys something about my trade today. I entered my first entry from here, 20 lots. No, 10 lots. I entered the entry from here, 10 lots. That's 30. As at the point that the market got here, it was around 17 pips. Now multiply 17 times 30. How much will you be having? About $5,000 just from year to year. Remember, this was the target. Everybody was expecting it to create a new high. But as when it gets here, it is already when? It's already what? About $5,000. That's about just 5 million. 5 fucking million naira. But you that you enter with 0.1 lot, you'll be making $17. What will you feel like? You feel like even if you take your partials here, you will still want to enter again because you want to make more. But remember, the same setup, the same pips, somebody is making 5,000, you are making $17. So it is not just all about karma is good. It is all about the lot size and pulling in. A lot of mentors will not tell you the truth. They will make you feel like they are superior than you know they are not. The same setup that you took, the same pips that you catch, that you made $200, I can make $2,000 from it. That is the difference. You understand? That is the difference. So that's what I want you guys to understand. You are good. But the only thing that is fucking you up is you want to make more, which means you are putting yourself too much in the market. Anytime you are trying to buy or you are trying to sell, what does that mean? You are putting your emotion at risk and you are putting your money at risk. One prime setup daily can make you rich, which means it does not have to be a win. It can be a loss. But you know, with your edge in the market, when you take 5 trades, you are most likely to win 2, break even 1, and lose 2. If the 2 that you won is on a 3 risk to reward, that is 6%, minus the 2%, that is you are up 4%. If you are trading, if you are risking $1,000 per trade, you have made $4,000 that week. That means you've made almost 5 million naira in a week. But if you are trading your $100 account, it will look like you are not doing enough because you only make $40. That is why you overtrade. Most of you guys, it's not because you are not profitable. It is because you don't have money. That is the bitter truth. So you keep thinking knowledge is the problem, so you keep chasing it. Not a lot of people will tell you this because they want you to keep paying them. But me, I will tell you the truth. Though that is why you need to work hard. If trading is not really printing in enough money for you, find other means. Save up until you can be risking $100,000. No, until you can be risking 100,000 naira per trade. You would see that your life is so close to change. Because once you start risking 100,000 naira per trade, or let's say 50,000 naira, or let's just say 20,000 naira per trade, then you will know that making what is it called? Making 6 figures, making 5 figures, 100,000. 1, 2, 3. Making 6 figures is so easy. But it's because you don't really have much money, you have to take 10 setup in a day. You understand? So that about that. So let's go to today's topic. So I want you guys to know one thing. You are profitable. It's because you trade too much. That's your problem. So now let's go back to why we are here. So now, top-down analysis. So I'll be using ranges and I'll be using structure. So now let's break it down together. I want this to be very, very interactive. I want us to understand structure together. Now let's start from daily. We are going to do a lot of pair with the same logic. So you guys will understand what I'm trying to do. Now, we're in our daily right now. In this daily it can already tell that this market is clearly bearish. This daily. So now, but let's break it down together. In this daily, we have, I'm coming. I want this to be very, very neat. I want this to be very, very neat. Okay, let me use this. Don't worry, guys. We have a high to a low. We break structure right here. I'll be saying this like a layman, no, because I want us to be doing the same thing. We have another point, swing point, that created this low. After that, we have another break of structure right here. Now, we have another high. But this high did not respect this low. So which means it's changed to what? To bearish. So which means we have a break of structure. Okay, I've not. So we have a break of structure to the sell side. Now, after this break of structure, what do we have now? I want you guys to listen attentively to what I'm about to say. In this range, based on this time frame, what are the things I am going to look for? I'm going to look for where there is an imbalance. Looking from all these areas right here, from here to here, let's look for where imbalance is. There's no imbalance here. There's no imbalance here. Just wait. Just listen to what I'm about to say. Like you can see this one, I've explained structure to you. This guy broke structure 1, structure 2. You can tell by that. But on higher time frame, you don't really need to think about that. Why? Let me tell you why. Even if market break one structure, this is higher time frame. You are an intraday trader. This guy right here, he broke 2 structure, obviously. But let me explain that your own for you. Now, let's say this thing break one structure. That does not mean I want this thing to be so clear. Just follow me. We have high, low, high, low, high. He break one structure. He come here, it will react. Even though they are going to take it out, it will react, then rally, making this guy a what? A breakout block. Am I right, guys? Huh?
Yes, yes, yes.
So now imagine if this is a daily time frame, this reaction, do you know the amount of pips it would be? It can be 200 pips because it is a daily time frame. So on higher time frame, you don't just ignore even a single break of structure. I want you guys to understand those clauses. The reason is that reaction from that head and shoulder, even the small reaction can give you over 100 pips. Because this present reaction that has happened on issue now, let's measure it. From year to year, we already have 252 pips. So, because let's not say it broke one structure, just because Kama said you have to wait for 2 break of structure, will you have missed out on the 214 pips? No. But if it's on a lower time frame, it's not worth it because it's probably just going to give you like a 10 pips. So it's not worth it. Are you getting my clause? Huh?
Yes, sir.
Yes, yes.
So now, we have this 2 break of structure now. So which means we are bearish. So now, before we are bearish, we need to analyze this one too. Analyzing this one, we have a low. Watch attentively. I need you to understand structure. We broke structure here. I don't even need to be labeling. You guys are not beginners. You should get what I'm about to do. We have a break of structure here. Another break of structure here. Let's be following it too. Another break of structure here. Another break of structure here. You guys should follow me. Another break of structure where? Here. So if this is our recent break of structure, and we are in a bullish cycle here on this particular time frame, this is a daily break of structure. But on our 4 hours, we are bullish. So now, where is the last POI of our 4 hours? Our last range would be here. This is our point of invalidation for a buy. So if this is our point of invalidation for a buy, now, like I said, in every range, after that break of structure, you want to investigate where does market have an imbalance. So now looking at this price, why do you think the market is reversing from here? Why didn't it try to reverse from other points? Now, we have a week to week. That is your characteristics of your imbalance. We have one here. Let's check below. Where else do you have imbalance? We have a week. Guys, make sure you are following this simple thing. We have a week to week. A dying decision candle. A week to week. Right? So we have it there that. We have it here too. A week to week. Now, those are our reference points. That area is our reference point. Now, to now know which type of week to week are we going to pay more attention to, this is where now it comes in. I want you guys to listen attentively. I'll be explaining a lot of things in this breakdown. A lot of things. Now, this week to week right here is as a result of a protected eye, which means it is a valid point for us to look out for. Listen attentively. Now, oops, sorry. It took out this eye that created this loop and it breaks. So now, this one right here, he also took out this eye. Okay, I'll be doing that later. Okay, thank you. So now, it's the mouse that is misbehaving. So now, listen attentively, guys. Oh, this breakdown that I'm doing now is the same thing. You can use it on any time frame. So now, Kama said there's an imbalance here. There's an imbalance here. There's an imbalance here. Now, market use this one here. Follow me attentively, guys. Kama used this, the market used this one to initiate this big sell. The market is what? Reacting from this one week to week. It has not even, has it even gotten to this one? Not even yet. It has not gotten to this upper one yet. Now, this one right here, market did not use it. Market purged outside of it. Now, this one that the market use, is it any sort of our business? Fine, that's what we expect. We expect a reaction from it. This one, market did not use it. Then what happened? It is still useful. And how are we going to make use of it? That is where all these ones, they are as a result of FVG creation, manipulation and expansion, which is as a result of what? Momentum and distance. Now, this one that the market did not use, when did it get invalidated? This is the point of invalidation for the FVG. If you guys don't understand what I'm saying, please ask questions. This is the point of invalidation of that range. This is the FVG, but that does not mean market will just fill FVG and it will sell. It can come inside the range and sell off, but it must not what? Take out the point of invalidation, right? So now the point of invalidation was taken out here. So the question now is, they have violate the FVG. Am I right? Violation of the FVG now, it's now going to take us back to where is the last candle that took out the FVG? This is the bearish candle right here. That is the last bearish candle before they print all this bullish candle. So that bearish candle will be reclaimed for a new bullish move because it failed to serve its purpose here as a sell. So which means they will reclaim it to the opposite direction to create a new structure high. That is that about that one. I'm trying to use one stone to kill two birds, but that's just a brief of what I'm going to be explaining on FVG creation and reclaiming. But let's continue with our structure. So now looking at the structure now, market gets to a random point. Now, based on this point, we are bullish. Based on here, we are bullish. Based on here, we are bearish. Because we had a break of structure. Now, before we can confirm that we want to hold a swing, this guy has to be broken. This guy needs to be broken. But for now, we would assume that what? Yeah, FVG is fair value gap. But for now, we are going to assume that the market is on a pullback. So the question now is, if it is on a pullback, where is it likely to get to? Because we are assuming that we are bullish here. Even though we know that we are in a bearish cycle, but we react, we don't predict. So based on reaction, which is the present order flow that is coming here, we are bullish on it. So now, if this pullback is coming in right now, where is it most likely to get to? It is most likely to come and do what? Fill this gap. Weak to what? To weak. It's most likely to what? Come and fill this gap. That is for the buy side. Right? So now for the sell side, where is our week to week? Our week to week is here. From here to here. Remember, we are just still using this time frame. From here to here. That is our week to week. So based on this time frame, as a trader, what am I expected to do? I know that I have analyzed this chart. I am strongly bearish on daily time frame, but on this 4-hour structure, I am what? I am bullish. So which one of it am I going to focus on? If I am supposed to predict, I would say this market is bearish. Everybody sell, sell, sell because of what is happening here on daily time frame. But if I am to react, I am going to follow what is happening on 4 hours time frame. So what are we now supposed to do? We are now going to go to a lesser time frame outside of our daily. So going to a lesser time frame, remember we have counted our structure now. So going to our daily, what are we going to do? We are going to recheck this structure again based on this internal structure that is happening from this point that I marked to this eye. So based on the external structure, what can we have? We can tell that market has a break of structure here, 1. A break of structure here, 2. A break of structure here, 3. All these things break. So far, they not take out the low, break. This one too, break. Until we have this eye. So now, all this one that results in all these breaks now, market has took them out. Break, break, whatsoever you want to call it. So what does this tell me? This tells me that this market now is bearish. So if this market is bearish, it is already starting the bearish move right now. Remember, we are still on our 4 hours. So as a trader, I will now look this price. Where is this price respecting? And where is it supposed to get to? So this price now, I would say, like I told you guys, this point is a supply. Where is the last reaction that took it out? It is this indecision candle here in this my arrow. So now for we to confirm a bearish move, this indecision candle is supposed to serve as a demand right here, as at this point in time. I'm coming. Because it is the last push that took out this high. So market violates it with volume. So which means market will come back to reclaim it in our bearish order flow. So now, the mitigation of this, where is it going to get to? It has to what? Create a new low. So creating a new low simply means everything that we'll be doing inside here, we are going to be taking buy on a short term, and we are going to be taking sell on a long term until market creates a new low. So that is what I believe here, because I believe for the mitigation of this, a new low needs to be created. So what am I going to do as a trader? I am now going to what? Another lesser time frame. Going to a lesser time frame, I will now start counting the structure again. So counting the structure, what do we have? We want to sell for market to clear this low. So which means we are looking for a bearish order flow. So for a bearish order flow, let's analyze it. I'm coming, guys. Hello, Pick. How far? For where? You don't pay? You wow. You don't pay, everything don't settle. How much you can see? I'm cheap, I mean. What do you want this 5-bedroom duplex do? It's cheap, oh. What the fuck? 5-bedroom duplex. Wow, that's crazy. That's crazy. Yeah. Oh yeah, send me. But that one makes sense. Imagine. Why I go for that one? That one. This one a nice one now. Wow. I shall say you dey laugh like say you don't eat jackpot. You see, I'm saying, what they call am? Kini kan is not a delay, it's a denial. Ṣé àwọn àníbẹ̀ yìí máa ń sọ ṣá? Oh yeah, go run am quick. Make you keep one room for me. Oh yeah, everywhere good like that. But una be ritualist though. Imagine. How many people did the house? You go to chill with billionaires now. Oh yeah, it makes sense now. You know, say that your side too now, like just like 1 minute to main road. You get jacuzzi. Make I mute this session because we go start the stock rubbish now and they go the year. Because I did. Momo, una go 1 year. Una go 1 year. Na there una year go the I pause una session. Una 1 year another thing. We no